Welcome to Talk Tickers, where we break down the earnings calls so you don't have to. Today, we are diving deep into Patria's fourth quarter 2025 results. We're going to walk through how an analyst sifts through all the noise to find the real signal in a pretty complex report like this one. Let's get into it.
It's the big question every single quarter, right? A company reports, the stock goes wild, and you're left wondering what really matters here. Well, we're going to use Patria's latest numbers as a case study to show you exactly how it's done. We'll go from the headline numbers to the story from management, what the market had to say, and of course, our final take on what happens next.
So here's our game plan. We'll kick things off with the big headline. Then we'll decode the story management is telling, we'll analyze the market's, surprising reaction, and wrap it all up with our call on what to look for from here.
All right, first up, the headline. Now, Patria's quarter wasn't a simple win or a clear loss. The numbers actually sent some conflicting signals, and that's usually where the real analysis begins.
Okay, so right off the bat, you can see this split decision. On one hand, you've got a really strong 9% beat on distributable earnings, and that's the metric that really matters for shareholder payouts. But on the other hand, a slight miss on revenue. So, which one does the market care about more?
And just to be super clear, for a company like Patria, distributable earnings, or DE, is pretty much the whole ballgame. Think of it as the actual cash flow the business spits out that can be returned to shareholders. From an investor's point of view, it's the engine.
And this chart just shows you that beat in plain sight. Wall Street was looking for 46 cents a share in DE. Patria came in and delivered 50 cents. That is a solid, clean beat on the number that truly matters most.
Okay, so the core number looks good. Now, let's switch gears and talk about the story management is telling, because they're painting a picture of a company that is seriously transforming.
The CEO called 2025 a momentum year, and their story really wasn't just about this one quarter. It was about a huge strategic shift that's built on two main pillars. First, just powerful organic growth, and second, a massive transformation through acquisitions.
First, they really hammered home the point on that organic growth. The firm raised a record $7.7 billion in 2025. They were just smashing through their own targets. This tells you that the core business is absolutely firing on all cylinders.
Second, and this is really the key to their whole long-term vision, they have been on an acquisition spree. And this isn't just about getting bigger, it's about fundamentally changing the DNA of the company, buying new skills, adding more products to the shelf, and pushing into totally new territories.
And they have been incredibly active. They bought Solis to get bigger in Brazilian private credit, they picked up RBR to become a powerhouse in Brazilian real estate, and, this is the big one, they bought WP Global Partners to plant a flag firmly in the U.S. private equity market.
So what's the end result of all this shopping? Well, you get a much more balanced business. Just look at this chart. Once you factor in the acquisitions, the company is way less dependent on any single strategy. And in theory, that should make for a much more predictable stream of earnings over time.
And here, this is the real signal of confidence from management. Even with all this M&A activity, which can be super disruptive, they held their 2026 guidance completely steady. They're basically telling the market, yeah, we can integrate all these new pieces and not miss a single beat.
Okay, so let's recap where we are. We have a solid beat on the most important number and a clear, confident story about the future. You'd think the stock would rally hard on that, right? Well, this is where things get really interesting. The stock did pop at the open for a minute, reacting to that good DE number, but then the sellers showed up, and they just kept selling all day long. The stock closed down over 7% and on way heavier volume than usual. Ouch.
This is the exact puzzle an analyst has to solve. Why would a report that looks pretty good on the surface lead to such a sharp sell-off? This divergence between the headline number and what the stock actually did, that's where the real signal is hiding.
It's never just one simple answer. It was a mix of things. That revenue miss, even though it was small, it gave the bears something to latch onto. The stock had also had a nice little run before the report, so you probably got a classic sell the news event. But really, I think the biggest thing is that the market's focus just shifted. They stopped celebrating the wins of 2025 and started worrying about the risk of integrating all these new companies in 2026.
All right, we've gone through the numbers, we've heard the story, we've seen the market's reaction. Now it's time to put it all together and form our own thesis. Let's make the call.
So here's our take. We expect the actual business to keep performing well, but the stock, it could be stuck in neutral for a bit. The market is basically in wait-and-see mode.
They love the long-term story, but they need to see proof that management can actually deliver on integrating everything. And for that reason, our rating is market perform.
So after all that, what is the one single thing you should take away from Patria's crazy quarter?
It really just boils down to this fundamental tension. Management has laid out this bold, really compelling vision for the future. But the market, for right now, is way more worried about the risks of just getting there. The key question for the next few quarters is simple. Can their operational skill win out over the market's skepticism?
This is not financial advice.